Good morning, everyone. Welcome to Office Adda 24/7. My name is Neharka Valia Bhatnagar, and I am with you with the area of accounting and financial management. So, let's begin with the class today. What's the topic for the day? The topic is financial management. Okay, so we are moving towards module C now, as promised. So, starting from the module C, the first thing is going to be what is financial management. Chali, let's begin with that part first. The term finance is money. Accounts is all about money only. Not even once I said that you can take up any element which is non-financial. So, under the term financial management, what is it? Finance is the money that we have. But it's not about having an ample amount of money. It's about managing that ample amount of money. Isn't it? So, management is about having the money, taking the decisions where to use this money, where not to use this money, what to look forward to when it comes to all this working. That is financial management, the management of the finances of the organization. Okay, so here comes the first question. It says, which one of the following statements about corporate social responsibility is not correct? The first question is related to the CSR. It is related to Companies Act, specifies the companies which are required to spend money on CSR. CSR spends is totally voluntary and there is no legal requirement. Only specified activities are eligible to be covered under CSR, or companies are required to spend at least 2% of their average on CSR. Okay, so if we talk about the corporate social responsibility now, so there CSR is required only for some higher level companies. For others, it is not, but it is required in certain companies. It is not totally voluntary. It is not something that you can choose. कोई बात नहीं, we will go through CSR. नहीं रहने देते हैं. That is not there. You cannot choose to go and give money for corporate social responsibility or not. It can be your own choice, but ultimately, for most of the companies, it turns out to be it turns out to be a compulsion only. ठीक है? CSR spends is totally voluntary and there is no legal requirement. Done. Which one of the following is not amongst business ethics? Philanthropy, honesty, integrity, or trustworthiness? Trustworthiness is required because, in terms of the books of accounts, how will we feel that the books of accounts are worthy of that particular respect? है ना? How would we believe that the books of accounts are prepared and they are honest? Oh, this thing will come with time, no? Isn't it? So if it's going to be based upon this, then what would be the answer? Honesty is required, integrity for all the accounts are required, but philanthropy is the choice of the particular person, isn't it? This is not a part of the business, it is by choice that people do this. So in this case, what would be the correct answer? Done, everyone? Chale. Now let's look at the next point. The correct answer is philanthropy. You don't do the charity work in terms of the business, though people do it to adjust their money, but this is unofficial, not official. Next point, which one of the following can be considered as an agency problem in financial management? I'm not the owner of the company, but I take care of the company. You know, managers aren't the owners. They're mostly the people who manage the particular organization. So first is conflict of interest between the company and its suppliers, conflict of interest between the company and its customers, conflict of interest between the company and the government, conflict of interest between the shareholders and the management of the company. This portion is totally between shareholders and management of the company. Shareholders are the owners of the company, but they have no clue what's happening in the organization. They are not the owners of the company, but they manage the operations. Sometimes among them, there is a major problem of trusting each other. Since they don't trust each other, so ultimately the entire working goes haywire. Next, risk return. Everyone, why would you take risks in a business? What's the big reason or big idea behind taking the risks? The risk and reward is trade-off implies which of the following? Aiming at high return and low risk, aiming at low return and low return, low risk and low return, striking of the balance between risk and return. Everybody, I will take the risk only and only if I get something in return. If I don't get something in return, there is no meaning to go for the risk, isn't it? If there is higher risk, it would be a higher return. If the risk is lower, then obviously I'll expect lower return as well. For example, FDs, there is no risk there, so the return is also lower, while in terms of shares, it is higher, isn't it? So, what would be the correct answer? The trade-off is striking the balance. What is the amount of risk that we can take? What is the amount of return that we can expect? Done? Okay, next portion. Acha, they have given the answer none of the above. The correct answer is actually none of the above there. If we go for it, see, this is not right, this is also not right. But striking the balance between risk and return seems to be right, but there is one more problem. It is actually trade-off. Trade-off is the balance. Risk and return balance would be like higher the risk, higher the returns. So they are not looking forward towards balancing, but they are looking forward towards the fact that if the risk is going to be higher, I would want a higher reward. That's why the difference is in the line. Okay? Capital structure implies which one of the following? Proportion of fixed and current assets. Capital structure is what? See, if I need money in the business, it can be from two sources. Capital structure. One is when we ask for the shares, and one is debt, debentures. Equity shareholders are the owners of the organization, debt are the loan providers. So, capital structure implies which one of the following? Capital structure would simply mean that they have to find out what would be the portion of equity and how much loan that they can take. So, second is current assets and current liabilities. This is done in terms of working capital. Working capital means day-to-day need of money there. That is working capital. Proportion of long-term and short-term liabilities. That is C. This is a part of their current and non-current scenario. While when we talk about capital structure, it is proportion of debt and capital. Okay? Proportion of debt and capital. Which of the following is the main objective of financial management? Revenue maximization, profit maximization, wealth, or cost? Which of the following is the main objective? Why do we follow financial management? Simple reason, we would like to do two things. Huh? To be very honest, the business lives on only two things. One is Profit maximization. That is to increase their money. And once their money is increased, ultimately, what would happen if the business grows? Our shareholder also grows. You know? So they say, what is the ultimate goal? The ultimate goal is to keep the shareholder happy. If the shareholder is not happy, now this is where the entire thing goes down the drain. Okay? So I would say the correct answer is wealth maximization. That would be wealth maximization, everyone. Because that's the only thing which provides us the details in such a way that wealth maximization is the ultimate goal of the organization. They would always want that the business grows further, है ना? Isn't it? Chaliye, let's move on and talk about the next point. The answer is wealth maximization. Basically, now they say that wealth maximization comes from profit maximization. If the organization earns more, then the shareholder earns more. Na? The shareholder is not making money on their own, so it is directly proportional to profit. So the business should grow further. If the business is growing, then everything else will grow. A firm determines the shareholder's wealth by taking the number of people employed in the firm, a book value of the firm's assets less than book value of its liabilities, the amount of salary paid to its employees, the market price per share of the firm. A firm determines the shareholder's wealth by taking. If you're looking forward towards shareholder, you're going to take the book value of the firm. Okay, what is the value of the firm? Or either you have the share capital of the organization, number of shares do they have, and then multiplying it and finding it on. Okay. So if you're looking forward to it, if the share capital book value is not given, you take your all the assets and remove all the liabilities. What is left is your capital, the money which is invested by the shareholder. Okay, na? The money which is invested by the shareholder. So it is the book value of the firm's assets less the book value of its liabilities. Done, everyone? All the listed companies are required to prepare fund flow, cash flow, statement of affairs, or all of the above. If it is a listed company, rest everything is definitely something which is not known. But one thing is for sure, if your company is listed, then it is compulsory as stated by SEBI to prepare cash flow statement. We are supposed to prepare the cash flow statement. So this is compulsory. Statement of affairs is not really compulsory, and at the same time fund flow is never compulsory for any organization. Okay. Then comes the next point. What do you mean by EBI TDA? Somehow we are going to use all these terms in the upcoming topics like ratio analysis, capital budgeting. We are going to talk about it. So it's just a beginner point. EBI TDA, it is earning before interest, tax, depreciation, amortization. Earning before interest, taxes deducted annually. Earning before income, taxes, depreciation and amortization, and interest, tax, depreciation and assets. When we talk about EBI TDA, what do you mean by that? It is actually earnings before interest, tax, depreciation as well as amortization. Amortization happens in case of intangible assets. Depreciation happen in case of tangible assets. That means we would like to know before we are paying off for all these things, what is the value. If this value is not known to you, you take your net profit. First of all, add back tax because that's the last thing that you pay. Then what you get is earning before tax. Then what you have to do is you add back interest. What you get is earning before interest and tax. After this, the next is you add back depreciation and amortization, if any. And this is where you will get EBITDA, earning before interest, tax, as well as dividend. Note this down, this is not only helpful in your JIB examination but also in your CIB examination. So quite a powerful topic to look forward to. ठीक है ना? Done, everyone? Chaliye. Now, I hope you have noted it down. They have just added back the one which we normally reduce to eliminate their presence. So it comes out to be earnings before interest, tax, depreciation, as well as amortization. Done? What is the main goal of financial management? Another question, similar management. Maximizing profits, maximizing shareholder wealth, maximizing sales revenue, and maximizing market share. Acha, let me tell you what is connected. First of all, your salary, your sales and revenue increases. You earn a lot in terms of sales. Then you make a lot of profit. Then slowly and steadily, people come to know that you are making a lot of money. Your market price will increase, and at the same time, shareholders' money will also increase because after making all the payments, you will still have an ample of amount. So the answer would be B. Maximizing shareholder wealth. Next question. Which financial statements shows a company's revenue and expenses over a specific period? Balance sheet, income statement, cash flow, or statement of retained earnings? Which financial statement shows a company's revenue over the period of time? Right? We are taking up 1 year, 2 year, 3 year. We're just looking at revenues and expenses, nothing else. Balance sheet looks at assets and liabilities. Cash flow is about inflow and outflow. Retained earnings is what is left. So correct answer is income statement. So the correct answer is income statement. Done. What is the purpose of budget in financial statements? Budgets are required. Every year we have a budget in our country. Even why is it required? To track historical data or to control and plan for future activities or financial activities or calculate the market price, company's market value or assess the company's liquidity. We do not look at company's liquidity through this. We are not looking at the market value. We are not even trying to track the past. We are just anticipating our future based upon our past. So correct answer is to control and plan for future financial activities. Okay. So this is it for the day, everyone. I hope this class was useful for you. Now, if you would like to look forward to our courses, then what can you do? First of all, go to our website, that is www.adda247.com. As soon as you go on to this area, you just have to click on the area of JIIB, and there it is, everyone. I hope it's visible. If you look at our website, this is where you will have to look at the JIIB October 2023. As soon as you click on the JIIB October 2023, you will find double validities going on, everyone. You can use the code exam80 and you can take up our courses. The revision batches have just started. Please start preparing for your examination as early as possible. The revision batches are out where we are covering 4,000 plus MCQ case studies. Revision batch has started officially. So what you can do is you can join it up and The timing is from 6 a.m. to 10 p.m., right? So you can take up the course. It has just started and you can buy it for 2,999.8, be it English medium or the bilingual batch. Anybody who is preparing for future, then you can definitely take up the JIB Mahapack, or someone who wants to prepare in detail, they can take up the Mahapack, because under Mahapack you will get everything. You get the entire JIB, past batches, present batches, plus the future batches even for the JIB. This is exclusively for the JIB. All the ebooks would be available, test series and whatnot. Even the revision batches covered in the Mahapack. So one particular course covers everything. So let's meet in the next class, everyone.